Warren Buffett is offloading bank stocks and stacking a record-breaking of $325 billion in cash. That's the largest cash reserve he's ever held. So what's he up to? And what does it mean for us? Now, Buffett, the ultimate long-term investor, is selling major bank stocks, including Bank of America, and even trimmed his Apple holding. He's got more cash than stocks in his portfolio, a level of caution we haven't seen from him in decades. So does he know something we don't? In this video, I'm breaking down Buffett's recent move, what they mean for the stock market and crypto, and whether this cash pile is the ultimate warning sign. But here's the twist. While this move may look like a red flag, there is more to the story. Hi, my name is Lamia. Welcome to Web3 Crypto, where we decode the financial world and its implication for cryptocurrency and blockchain technology. Let's dive into Buffett's recent action and how they might signal something bigger for the markets and for crypto. First off, Buffett's known for his long-term investing, has been offloading major bank stocks including Bank of America. Since July, he sold 238.9 million shares or 23% of his holding. He's also trimming his Apple position, slashing it to 69 million shares, a two-thirds reduction in just over a year. So why is Buffett making these moves? Banks are sitting on the largest unrealized losses in history, primarily due to bond yield mismatches. With the risk of more banks' failure looming, this looks like a strategic retreat from a vulnerable sector. For Apple, this could be a smarter tax strategy to shield Berkshire Hathaway from potential future tax hikes. Is $325 billion in cash a red flag? All this selling has left Buffett with a cash hold of $325 billion. While this might look alarming, Berkshire's cash reserve has spiked before during crises like 2008 and 2020. So, is Buffett signaling a market crash, or is he simply waiting for the perfect opportunity? Here's the kicker. Most of his cash is parked in US Treasury, generating $16 billion a year. Buffett isn't rushing, he's prepared to strike when the time is right. Here's a key point we need to acknowledge. Even the smartest investor can make mistakes. Warren Buffett, one of the most successful investors in history, completely missed the biggest performed asset class of the past decades, cryptocurrency. Bitcoin, which has outperformed every other asset in the world, wasn't part of his portfolio. This highlights a crucial lesson. No one, not even the richest or most experienced investor, is immune to missing out on innovation. The same thing has happened to major companies that failed to adapt to new technologies. Take Kodak, for example. Once a leader in photography, it ignored the digital revolution and was left behind. This teaches us that if investors or companies don't embrace new technologies and innovation, they risk becoming irrelevant and being outperformed. Crypto and blockchain technology are today's disruptive innovations, and ignore them could be as costly as ignoring the internet in the late 1990s. So how does this impact crypto? Now, here's where things get interesting. For crypto, if Buffett's actions signal trouble ahead for traditional finance, this could actually be good for Bitcoin and crypto. Banks are already under strain, facing rising risks of collapse. Historically, when trust in traditional systems erodes, people seek alternatives. Bitcoin, often called digital gold, could emerge as a safe haven alongside gold. Its decentralized nature shields it from the systemic risks plunging banks. In fact, during the 2023 US banking crisis, Bitcoin's price surged as confidence in banks dropped. When traditional finance falters, crypto often thrives. Should we follow Buffett's lead? Here's my take. While Buffett's move highlights risk in traditional finance, most of us aren't playing the same game as him. We have the flexibility to explore high growth opportunities in areas like tech, AI, Bitcoin, and even tokenized commodities. Instead of hoarding cash, diversifying into decentralized assets like Bitcoin may be a smart hedge against the uncertainty. Buffett seems to be prepared for what's next. So, is Buffett's massive cash pile a warning to get out of the market, or is he simply positioning himself for the next big opportunity? For us, this might be time to lean in. If banks continue to struggle, Bitcoin could solidify its status as a safe haven in the digital age. Let me know your thoughts in the comment below. If you found this video valuable, hit the like button and subscribe for more insights into how traditional markets, crypto and Web3 collide. I'm Lamia, stay ahead of the curve, and I'll see you in the next one.